So 2024, what does it have in store for us? I always say our industry is based on supply and demand. It's the yin and yang of this industry. And of course, we're in an oversupply cycle, and that will impact us very much. So if we look at growth prospects all over the world, these are the last IMF numbers. US is down, Europe is very bad. If you look at Germany, you can start crying. Some places in Southeast Asia look a lot better. Africa looks better, but is really still a small market. South America is still in trouble in many countries. So there will not be that much growth out there. In the past, we used to have a simple indicator where we said, okay, if GDP grows 1%, then normally container volumes grow 2%. Then this indicator went down to 1.5, then it went down to 1.1. At some stage it was 1, and now it has lost total traction because the markets in terms of housing and other commodities actually impact the GDP more than world trade in goods. Huh? So it's a bit hard to make a forecast based on that, but the overall picture doesn't look very pretty. Similar from OECD, you can look at the numbers in detail. The forecast is a little bit older, so they look a little bit different, but in the end, it's a very similar picture. Inflation is still sticking around. We have seen a few more reductions since this graph. So we're now down to 3.2 in the US, we're down to 2.9 in Europe, but we're still far away from the numbers that we used to have, and money is still costly, interest rates are high. We'll be in an industry where we will be making small margins again in the 3% area, and there will be bonds in certain markets where you get 5 to 6% return, and so certain capital will leave this industry and certain talent too. Huh? Good. On the demand side, we're so looking at very different kind of forecasts that are impacting a bit the view. So it can be 2 to 4, it can be less. What we know more about is the order book, and is actually the supply side, and there's a lot coming. I'll go a bit faster through them. I have a few different viewpoints from different consultants, but in the end, they're all very similar. There's a lot of ships on order. There is, especially if you look at the order book of MSC, there's still 124 ships coming. You have CMA with still 120 ships coming. Of course, it depends on how much gets scrapped and when it gets scrapped. It depends a bit on environmental regulations and a lot of other things, but we're looking at a top control of the top 5 of 65%, okay, which is a relatively high concentration, the highest the industry ever had before. We had 84% almost for the top 10. If we go down and look just at the top 3, they are already controlling 46%. So even if we are in an oversupply cycle, if 3 people would be able to agree just to stick to their guns, the market could make a very quick turn. So we'll see how that goes. This concentration is a danger in itself, and it's hard to forecast what they do with it. So different forecasts say different things. Some people say 26, 27, 28. There will be oversupply for some time to come, so whatever downturn that we're facing now will be there. Huh? So that's something nobody can change, and it will impact markets a bit differently, so let's see. Another factor that's important is this whole environmental discussion, because regulations are changing. You know, these ships are getting bought, they need 2-3 years until they're built, they need another 25 years to run in order to be profitable. And the problem is, if you order a ship today, what fuel is it going to run on in 10 years, in 15, in 20? And that discussion is still open. There has been a study earlier this year which said that the whole decarbonization of container transportation would only cost 40 billion, which actually would be little money compared to the earnings of the last 2 years. But these numbers are also a bit doubtful, because one problem is that for the new fuels, there will be competition. Steel is looking for green fuels. A lot of other productions and energy-intensive productions are looking for the same kind of resources. Today, ships are burning more or less what nobody else needs. And in the future, they will compete for little fuel with a lot of other players, and that will, of course, impact pricing for quite some time. So regulations that change here might have implications that will impact whatever carriers do, what ships they scrap, what they don't scrap, how long they carry on, how long they don't, and what it does on pricing too. Another thing is geopolitics. It remains messy, okay? Weaponizing of trade relationships and so on continues. So new trade lanes open up, certain trade lanes get blocked. We have a lot of conflicts all around the world. I don't think this will change, so it's something that we need to bear in mind. So in short, we're looking at something a bit like this year, but a bit worse because you don't come with the backwind from a very good year or from one of the best years that everybody had. We're actually going into it from a year that already grounded us, and we will have to face something that will not be too easy. There's a lot of black swans around. Of course, people talk about cyber attacks since 10 years. It never seriously happened except the MERS case and some others. But last week we had the DP World scenario happening in Australia, which was impacting their business for quite some time and which can have repercussions for us as well at some stage. Huh? So there is things that we need to be aware of, but if you live without risk, yeah, you might as well not get up in the morning.